And what's up? What's up, guys? Welcome to another brand new episode of FX Basics, FX Talk. And this is the simulation session here. And I have Kevin in the house as well. Mr. Kevin is in the house. And Kevin, are you trying to leave or something?
Yeah.
Uh-huh. Yep. So this is gonna be a random quick simulation session. So we're gonna talk about some ideas. So what we need to do is first thing we need to find some random dates, a random date generator, and let's see what dates are we going to stream on, right? And obviously we're going to talk about some ideas, some important ideas. Obviously we're going to talk about we're going to answer any question from the YouTube community, any question. So we're going to back to 20.
No, let's do our best. Have fun.
Yeah,
I'm off.
you too, have fun.
Okay, bro.
See you later. See you later. All right, and yep, we are still up and running. All right, so let me fix my mic. My mic, and my mic is all good. All good. That's good. All right, so we're gonna work from July 25th of 2019 to August 31st, 2020. That's what we're gonna work in about 1 year of 1 year of data. So all you have to do is you have to go to random dates and find out your dates. Obviously, I need at least six random dates. I need to include Monday, Tuesday, Wednesday, Thursday, Friday, and let's get the dates here. So the dates are, so one of the dates is it says August 27. Okay, that's nice. August 27. So all I gotta do here is I need to first, what I need to do is I need to go to a random ass chart and I need to take the dates back to August. Okay, so this is January, February, March. Okay, March 13th. This says March 13th. So what I need to do is I need to fix the chart first. First thing, fix the chart. 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 We're gonna fix the chart. And we're gonna fix the chart. All right, that's good. That's pretty good. All right, so we'll go to a random as smaller time frame so that we don't know what's happening. So we need to head to August, right? So we are around Jan, Feb, March. So we need to go March, June, July. This is 7, right? Is it 7? 7. Jan, Feb, March, April, May, June, July. Oh, 7th is the July. Okay, so this, it's not August, it's July. But what is the date? It's 8/27. The random date is 8/27. All right. 7/15, 7, 8, 5. Now we need to go to 8/20, 8/27. Okay, that's what it is. 8/27. 8/27. 27, 8/15, 8/16, 8/19, 8/20, 21, 2, 23, 24. All right, so apparently 27 was the Tuesday. So let's just fix the charts one more time. From weekly, or a weekly fix the chart, daily fix the chart, 4 hour. Let's see. Oh, what's happening with the mouse? 4 hour fixed chart, 2 hour fixed chart, 1 hour. Oh my god, something's wrong with the mouse here. Something's wrong with the mouse. And 15. Oh, is the battery dying or something? Oh god, what's happening? Mr. Mouse, what is happening? Mr. Mousey. And we'll try and keep the stream as short as we can. Obviously, we're just going to talk about different topics. And that should be it, right? At the end of the day, that should be it. So we're going to talk about how to choose currency pair. So how do you actually choose currency pair? for beginner traders, if you're actually trying to choose currency pair, I think to start, exotic pair are not the best. Major pairs sometimes are pretty volatile and often resulting in like oh, my mouse is actually funny. Oh no, my mouse is actually funny. So I'm gonna work with my trackpad. Well, let's see. Dun, dun, dun. All right, fix the chart. All right, let's go to the daily time frame. So this is what you do, right? So beginner traders, if you don't know how to build your bias. So I was actually talking about how to choose the currency pair. So we are actually back testing GBPJPY. If you don't know what the currency pair we are back testing right now is, it's pound yen. All right. So what we need to do is we need to be aware about the news activities happening around, and we need to know what session it is. So this is a small bar here that is in the application that actually lets me know what session I am in, so which is a good thing. And again, at the same time, I need to know what kind of news activities are happening around me. So for news activity, what I do is I go to news, and I just put this bar at the side so that I know what news and what kind of activities happening around, right? So I need past 20 activities, and I don't need this on my chart. I just, all right, so do we have any news today? Looks like there is a low impact pound news around the Asian session. Oh no, London session, and there is crude oil inventories. Okay, so in US impacted, US high impact news. But it looks like GBP is pretty clear. So because we are actually looking into pound yen, doesn't seem like there's going to be a lot of consolidation here on a Tuesday. So now, if I have to actually break down the chart, this is how I'm going to break down my chart, right? So hang on a second there. Oh, look at this. Look at the recent trend in pound yen. So again, one more time, I'm going to fix the chart so that I have fixed scale. Fixed scale is a lot more better to navigate around, and you don't feel trapped. Otherwise, you feel trapped. All right. So what I'm going to do is I'm going to do this. Let's go here. Let's fix the scales. Let's fix the scale. Yep. Let's fix the scale. Let's fix the scale. Fix. And let's fix the scale. Yep, that should be okay. All right, now let's go to the weekly time frame and break down our bias, right? So what is the bias? We're slowly going to break down our bias. We're going to break down our bias and everything, right? So now looking at the weekly top, look at this. The candles are falling down pretty heavy, isn't it? So the bias is pretty bearish. We have broken this support, recent support, and we broke this support as well. At this point in time, price heading down pretty bearish. So obviously pretty clear to say that, you know what, bias could be bearish, but again, at the same time, price in a weekly sort of a time frame here around this very time is so close to this support. So for example, if I have to draw a support from here to here, this is a weekly support where the price is bouncing off of. All right, so it's a Tuesday, obviously, but the price has bounced off of that weekly support. It's so clear. So obviously, what we know is we don't buy near a weekly support as the price is approaching the support, but we actually look to see if the candles could start reacting around that rejection area. So this gray area is another rejection area, a higher time frame rejection area. So have to be careful. Have to be careful in a way that, you know what, prices can react in a explosive manner around that sort of an area. But in the other hand, if price starts breaking this weekly sort of a support area, another target on the left hand side, for example, could be here. This could be the other target right here. Look at this. Look at this. This could be another target. If the price is to push down with lower low, lower high, this could be another target. Weekly support area right here. So this is what we're going to do. This is what we're going to do. Dun, dun, dun. Parameters. 13. And we're going to do 20. And we're gonna extend that. We're gonna clone that on our charts. And this is what we're gonna do. So the most recent support, the most recent broken support is this right here, which is pretty far. So I don't think I actually need that. So all I need to see is now I need to go to the daily time frame and see what's happening, right? Go into the daily time frame obviously ranging side by side at this point in time. So if the price is actually reacting with the weekly support, all I need to do is I need to do this. What I need to do is I need to make a resistance. What is the most recent resistance that the price can actually break off of? This could be a recent resistance right here. Pretty clear, isn't it? That's where the price is actually resisting off of. So the range could be from here to here. The range is in about 350 pips. Ooh, that's a lot of pips, right? Now on the upside, my possible target on a daily sort of a perspective could be right here. This could be another rejection area where the price can actually tap into or reject from. So I can actually clown this as well. Let's just clown. And let's go into the 4-hour time frame and see what's happening in the 4-hour, okay? So on the 4-hour, look at this. Look at the way it's been pushing down for so long. It was pushing down. Now all of a sudden, price is starting to push sideways. It's pushing sideways. But in the other hand, if you want to see the micro detail, look at this. This was the rejection area. Price rejecting, moving up, making steps, right? Making steps. So it's kind of pushing up. So on a 4-hour time frame, I can actually base myself as a bearish bias if price is meant to react with the weekly support level. So what I can do at this point in time is I can make it more simple. So the chart can be made much more simple. For example, for now, this is the ultimate resistance on the top. If price starts breaking 130,500 on the upside, I have a clear range all the way to I would say 131,645. So that's going to be my target on the upside if the price is to push down, right? Now on a 2-hour time frame, let's go to the 2-hour time frame and see what's happening on 2-hour. 2-hour time frame candles are ranging side by side, and the upside range from break of this resistance is in about 40 pips of range, which is a good range. But I would love to be happy. I would love to see if price could break this 130,500 sort of level. All right. So what I'm going to do is I'm going to actually forward the time to the New York session, because I'm only going to backtest New York session, nothing else except for that. New York and NYSE. So it's going to be this time right here and 1.5 hours after that. So what I'm going to do is I'm going to forward it all the way there. Yep. Oh. And all right, so this is supposed to be the time, right? So pre-New York is supposed to be the time. So this is the exact time what we're gonna simulate. So look at this. So right now the bias could be biased because seeing the price making higher rejections, price rejecting the bottom and moving up, slightly moving up every time. So for the price to move up, all I gotta see is I need to see price breaking 129,880. So that the price could move up in this 40 pips range. I need to see price breaking 129,880. So what I can do is I can draw another line here. 129,880. That's lovely. All right, now this is the pre-New York time. As I said, obviously a lot of volume seen around these time, and the price is moving up pretty bullish, right? For the price to push up, it has to maintain a bullish posture above this area. For the price to push down, it has to kind of reject this area and start pushing down below this support and obviously show some rejection around this area. So let's see what's going to happen, right? Let's see what's going to happen. So let's forward 1 hour candle. All right, this is the exact pre-New York time. And if you look into the hourly candle, look at this. The hourly candle actually rejected off of this 129,880 sort of a level. So for the price to push up, it has to make a low wick at this point in time, and it has to kind of break this level and start moving up in this cleared range. Now, what I've seen with my experiences over time, for example, look at this. How many times did price actually try to break that level? Once. In the most recent price action, once. Actually, once here. This is the second time. This is the third time that the price actually tried to break 129,880. Couldn't close above. and another time, fourth time. Now this is the fifth time. Is this the final time the price is actually going to be able to break above? Maybe, we don't know. But if at least a hourly or a 30-minute candle starts closing above 129,880, that's going to be the money shot right there. That is actually going to be the money shot. So let's see what I'm going to do is I'm going to actually head into the 30-minute time frame and see if any of the 30-minute time frame candle actually starts closing above 129,880 sort of level. Let's see. Let's go to 30-minute time frame. The 30-minute time frame. Dun dun dun. Dun dun dun. Dun 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 dun. 30-minute time frame. All right. Need to see a 30-minute close. Now, this is almost about 1 hour away from the New York Bank Open, right? So 1 hour away from the New York Bank Open. So for the price to push up, it has to close above 129,880 for my buying sort of a scenario. So let's see what's going to happen here. Oh, we started rejecting 129,880 just like before, just like trying several times. Now, for me to take a sell at this point in time, just so that I'm a volume trader, I actually rely a lot on volume. So what I can do is now I can start looking for selling sort of a scalping opportunity. So this could be a possible selling scalping opportunity target right here. This right here could be my selling scalping opportunity. And what I can do is I can actually do this. I can try and look for sells below 129,470 sort of a level. So what I can do is I can actually fast forward the time. Let's see, we are in about New York market open right now. There's no news happening around this clock, which is good. Prices are ranging, which is also a good sign because whenever there's a range, price often breaks a certain level. Right now, look at this. We are in about 4 minutes away from the New York Open at this point in time. So let's see what's gonna happen with the New York Open. All right, so New York Open. Let's see. This is the New York Open. So if prices start breaking 129,880 sort of a level, I mean, there's a higher chance prices could continue up because with volume, often we have seen a GJ push a lot with volume, and this is the volume time. So what I can do is actually looking at the way, looking at the candles, the way it's moving, it's actually approaching this 129,880 sort of a level, right? Now, if I see at least a 15-minute candle close above that level, at least a 15-minute time frame close above that level, my bias is going to be bullish at that point in time, right? Just give me a second. I need to fix the chart. Skill fix. All right, so all I need to see is a 15-minute candle close above 129,881. Now, if you see what I say, I repeatedly say, waiting for the close of the candle. Now, waiting for the close of the candle is really important because that way I can clearly see, or I can clearly base my bias onto the data that the market's providing me. But if I just think about candles moving up and if I take a trade, I mean, that's a desperate trade. So you have to wait for the quality trade. So what is a quality trade? Once this candle starts closing above this level, a 15-minute candle, at least to start with, that is a really that is a logically seen and built up bias. You're not just trading off of emotion at that point in time. You're clearly saying to yourself that, you know what, I'm going to wait for a candle to close, and in the next 1 minute, if this 15-minute candle closes above, I'm gonna start building my bias for buys at that point in time. Let's see. Wait, and look at this. This 15-minute candle actually closed below 129,880, and at this point in time, this 15-minute candle, the second 15-minute candle, is actually heading up. 15-minute candle breaking the high, and this is the volume time. So there is higher chance for the candles to push up. Now, obviously, I've missed my trade because that was a quick maneuver. So what could I have done was, if this 15-minute candle closed bullish, the previous 15-minute candle, I could have actually placed my pending around this level within about 10-15 pips stop loss, anticipating the volume to continue pushing the price on the upside. Now, I've obviously missed it, but the bias is still buy. The bias is still buy. So what I'm going to do is, look at this. Bias. Bias hasn't changed yet. Okay, so let's see. Yep, and it's pushing up with volume. Now look at this. Now this is the close of the next 15-minute candle, right? So one 15-minute candle finally managed to close above 129,880 sort of level. Now that is not only a 15-minute candle, but that is a 30-minute candle. Now here's the thing: for the price to continue moving up, it has to maintain a bullish posture above 129,880. If the price starts breaking this candle's low, at that point in time, the buys could be invalid. Now we are 32 minutes in the New York session, so just have to see price maintaining a support on the smaller time frame sort of a level, or rejecting this 129,880 level on the bottom, so that the price could start moving up. That is the case. Simple and sound case. Now here's what I can do. For example, if this 15-minute candle starts rejecting this this level with its wick, doing this, so I can actually exactly show you what I'm looking for. Look at this. If the candles does something like this, now this is the trading candle right here. This is the trading candle right here. If the candle does this, this is very ideal. Now, if the candle does something like this, this is something we've seen over time, right? With volume. So obviously for the trade to be valid, we need to see candles doing this. We don't want to see candles coming back below this 129,880 sort of level. Okay, let's see what's going to happen in the next few minutes, okay? Oh, look at this. Did you see what it did? Now it's actually trying to push above. So at this point in time, what I can do is I can actually measure how much of a pip this is. So in about 12 pips, right? So what I can do is I can actually put my buy stop around here. So this is my stop loss point around here, and my buy stop is going to be above the current candle's high. So anticipating the price to push the candles up, and again at the same time looking at the traffic on the left hand side. So this could be my target right here. So the take profit is in about 15 to 16 pips, and the stop loss is in about 13.5 pips. And when it comes to risk management, obviously I'm gonna be really fast. So if I've applied $310, I'm only going to risk and only going to apply less than what I applied at the beginning, right? I always want to lose less than what I applied. That is the basic idea. So for me to lose less, I have to be able to cut down my losses short. Now this is my my pending order. So I've placed my pending order right now, looking to see if the price could actually push up. Once it hits that 10 pips mark, I'm obviously going to secure. So what I'm going to do is I'm actually going to put the trade box. Let's see, put the trade box here. Trade box here. Let's see what's going to happen. We have 39 minutes in the New York market, and we obviously see a lot of volume around this time. So let's see what's going to happen. So on YouTube, Finesse Child says, thank you for another simulation. No worries. And Adnan says, thank you. No worries at all, guys. No worries. I mean, amazing. I would love to serve the community back. That's one of my ways to be successful. I want to give out whatever I've learned back to the community. So I want to help the community, because I also started from scratch, from nothing. Okay, so nobody helped me. All right, so I had to struggle, but I don't want that. I want people to learn, come and enjoy Forex, and not feel this as a hardship. This is a fun thing. If you take it as a fun, you're going to grow a lot. All right, now at this point in time, so let's see what's going to happen, right? So let's see if the trade is going to be activated, and all right, let's see. Ooh, look at this. So the previous 15-minute candle actually closed bearish. I mean, it closed bearish, but it actually respected the previous 15-minute candle's low. So that means the trade could be still valid, right? But on the other hand, because we are approaching NYSE at this point in time, the market may retrace a little bit, dip inside this range before pushing up. So the bias could be correct. But we have to wait. Well, I have to wait. So let's see how this hourly candle finally closes, right? So because this is the hourly candle close, final hourly candle close. And if this hourly candle finally manages to close above 129,880 sort of level, the bias is only going to get stronger. All right, so let's see. Oop. Did you see that? Ooh, look at the way the previous 30-minute candle rejected this. So this is the previous 30-minute candle. If I have to draw with my annotation too, look at this. This candle was the previous 30-minute candle. Also the previous 15-minute candle. That was the last final closing candle in the hourly candle. It rejected that 129,880 level. Now for the price to push up, it has to respect that, this level. Or when we go into the 15-minute time frame, look at this. When we go into the 15-minute time frame, there's a support form around there. So for the price to push up, now from our normal price action point of view, what we've seen is price moves up, making support. So where is the support? The support is right here. The most recent support. For the price to move up, it has to respect this support. It has to respect the lows and start pushing up. That way we can base our stop loss, our trade with this current structure. So the structure is still looking good for the price to move up. We just need some sort of liquidity grab on the bottom and start moving up, breaking highs, activating the pending order, and we could gain some pips. Let's see what's going to happen here. Ooh, that's good. That's good. It's looking good. It's respecting the lows. It's rejecting the support, so which is pretty good. Let's see what's going to happen. Well, that is cool. That is cool. That is cool because the pending hasn't activated. Now that is this is one of the beauty about pending orders, right? Now, why I often prefer pending. I'm obviously not saying you guys, or I'm not telling you guys to use pending orders. But what I've seen by experience is that, you know what? When I often use pending orders, I'm relying on volume. So if there's no volume, there's no trade, which is logical, right? Because I want to have a quick number of pips and I want to be out, right? And again, at the same time, the pending order allows me to kind of have less FOMO. So it allows me to be less funny, or it allows me to be patient because I'm waiting for my pending order to be activated, and the market has to activate this order, not me. I'm not going to press the buy button. It's a pending order. So when it gets activated, I will be ready to cut down losses short too. So this is a good idea for me, placing a pending order. Okay, now all I got to see is I need to see price respecting this support and start moving up, or stop closing below 129,880. That's what I want to see. Let's see what's going to happen in the next few minutes here. Oh, and the pending. Oh, look at that. The order activated and we got that pips right there. So the first number of pips, we actually hit that. Right? So look at this. This was the most recent trade here. So that was like 15 pips secure, right? So the trade idea was valid and the stop loss was also a valid idea. So the trade was too fast to see it, right? But the pending order was activated and with volume. So in about hour and 15 minutes after the NY session, we managed to secure 15 to 16 pips. The TP got hit. I didn't even manage to extend that take profit. The whole position got secure. So I'm going to show you what happened in the past 15 minutes. Let's see. We will reverse the candles and see and observe what exactly happened. So look at this. So what happened was we figured out a stop loss area. We figured out a recent support, and we read the recent market trend. So the market was obviously bullishing up, bam, bam, bam. Bum, 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 bum. So for the candles to push up, it had to kind of respect this support. So for the price to respect this support, it has to push up with volume. So that's what happened, right? So if I actually have to slow down my trade, let's just slow down the trade a little bit and see what exactly happened and observe exactly what happened in the market. Let's see. Oh, and the volume pushed the price up 1 hour and 15 minutes away from the New York Bank Open. Support has been created. The market trend was red. A proper price level was red. 129,880 was observed. That was the most recent rejection area where the price is rejecting from right now. and we didn't take a formal trade. The trade was based off of market volume, and it's pushing up right now, breaking the highs, which is the confirmation for the price to move up, which is good. Now look at this. I'm going to slow down this trade a little bit more so that we can see exactly what happened, right? I think this was a 1 second trade. Woo. Pushing up and TP hit. So that's what happened, right? Easy trade. We figured out a stop loss. We figured out a support area, and that's where our stop loss was, and our anticipation was correct. So this is a trade solely based off of volume. Now, solely based off of volume. So now here's the key ideas beginner traders have to understand. So when is the right time for traders to trade? So especially around volume time. So around volume times, not only they observe a lot of volume or quick results, but around volume time, the market is more predictable because the bias gets stronger and stronger, right? So when you have a funneled out, or when you have a more filtered bias, that way your profitability increases. So that's what you want to do. That's what you want to do. So your risk management also could be dynamic, right? Because for example, you apply something amount of pips, so you will get the result quick. You will definitely get the result quick. So let's see what was the next date here, and we will try and go through the date. And my mouse is acting funny. So the next date is 2024-30. So Jan, Feb, March, Ep. So April 30, 2020, April 30. Let's see what happened on April 30. Jan, Feb, March, Ep. Yep. So we're going to close this, and we're going to do this right here. So we're going to go to March, April. Let's see. Yep, so the YouTube guys, if you have any sort of question, just post the question, because this stream is only going to be for the next 15-25 minutes. If you guys have any question, maybe that's going to be answered. So take the chance. You have to learn to take the chance. Don't be shy. If you're going to be shy and if you're going to think somebody's going to judge you, you're never going to learn. If you want to learn, you have to step up. If you want to be the man, you got to be the man by stepping up, or be the woman, whatever that is. If you want to step up, you want to learn, you should be able to just come forward. If you can't come forward, I don't know how you're going to learn. So just ask questions and be the man. When I say be the man, I'm not being racist, or I'm not being gender profiling, whatever that is. But I'm saying you have to ask questions if you want to learn. That was the only way I and my friends learned. We always ask questions. We never stay there still like a dumb doll or something, you know. So you have to ask questions, man. You definitely have to ask questions. All right, so this is what I'm going to do. So we were talking about 4th, Jan, Feb, March, April 30. Right? April 30. All right, so we are here. April 30. Beautiful. April 30. So I'm going to fix the chart, because we are around 130 to 900 sort of a price. That's good. All right, so we got the first question in the YouTube. Adnan here says, is there a way to test the fake out trade? Yeah, I mean, so here's the thing. So to learn some sort of specific trade, you don't want to learn it like, you know what? You want to see exactly what happens. Exactly what happens in the market. Don't go for exact situation. Rather go for just a fluent date. You know, don't go for exactly that setup for now. If you really want to learn more about that setup, you only learn it when you see it live and experience the market movement live. But if you want to test fake outs, don't worry. We have 4 more dates left. Maybe one of those dates going to be fake out, and we're going to talk about fake outs and how we can deal with fake out and how we can actually trade fake outs. Don't worry. If the fake out's gonna happen, we're gonna go for fake outs. But we're not gonna search for fake outs to trade fake outs, right? That's not a valid idea for now. We're doing it as if we're trading our normal. We're trading in our normal trading days. We're showing up to the market. We're going to the New York session time, and we're just looking into the market and seeing how it's moving, right? It's as simple as it is. All right, now look at this. Now it's so important to see higher time frame bias. It's always important to find out what's happening in the higher time frame so that you can actually visualize and actually play around with your bias in the smaller time frame, right? Now look at this. So this was a weekly support that we determined before. This was one of the weekly support level right here. Dun, 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 a weekly rejection level right here. Right, a weekly rejection level. So I'm going to clone that right here. And this is another weekly support area right here. This is a very strong demand area, a very strong support area. And we are around here. Look at this, the most recent price action. This was a this was a weekly support that the price actually respected previously and is actually very close to at this point of time. Very, very close to, right? And let's go. So look at this. So my bias right now in a weekly sort of a perspective. So to look at the order flow. So what is a order flow? So order flow is sort of like a concept where you're seeing where the big institutions are moving the money from and to, or you just want to predict, or you want to read how the market's been performing in the previous price action. So look at this. Look at this. This price action. These are price areas where some of the most interesting price action. This demand area. Why is it demand area? Why is this a demand area? Right? It's an important question. So after tapping this sort of level, the price has been bullishing up so heavy. So that is a clear demand area. So clearly, this is an area where there was a significant amount of fluctuation in between buyers and sellers. That's what it is. That's what a demand area is. So this is the area where there was a big fluctuation of buyers and sellers. Apparently more buyers, and obviously the price was pushed up. So that buy was from the institutions, not from retail traders like us. We cannot move the market so heavily like this. So this has to be a clear institution entry. So after institutions entering, they always wanna target big number of goals or big number of pips. So they're not gonna exit in the next 10 pips. It doesn't work like that. There are a lot of numbers. There are big numbers of institutions that want to enter in a certain instrument, especially in pairs like pound. And look at this. So the institutions enter right here. The price started moving up. Clearly started moving up. They started securing certainly, and they wanted to start another phase in support. Moving up. And their final target was achieved, and the price started dumping. Dump the price. And the solid alien triangle has formed here. Look at this. Dun dun dun. Dun dun dun. Right? Isn't it interesting? So now why am I saying all of this funny information? How does it even make sense? It makes sense because this was the most recent level where the price actually rejected from. That was a similar price action that was actually happening in the most previous weekly rejection. So what are the chances price is actually doing it right now? If it's actually doing something similar as before, if the demand area where there was a big fluctuations of buyers and sellers, if that's actually happening right now as well, I mean the price is going to shoot up. But if the most recent trend in our price is bearish, we have to see candles making lower low, lower high. That's what I want to see. So on a weekly sort of a time frame, what I'm saying is basically my bias could be neutral. Now for a solid buy, I would love to see candles breaking this gray area. For solid sell, I want to see candles maintaining such a lower low and start filling the wick on the downside, start breaking lows. That's what I'm saying. Now what I'm going to do is I'm actually going to forward the chart to the New York session because we trade New York session. And that's going to be the main focus here. All right, this is the in about New York session time right now. New York session time right here. Okay, now this is the New York session time. So again, one more time. On a weekly sort of a time frame, my bias could be buys, could be sell. I'm neutral. if the demand area, if the support area is acting around, I can see prices pushing up with a clear range on the upside. If the prices are pushing down, I just need to see resistance being respected. That's all I'm saying. Now, if I have to go to the daily time frame, look at this. Daily time frame, after rejecting this demand area, is starting to push up. It's actually kind of rangy. Is clearly rangy. So the range from the bottom of the support or to the resistance, it's in about 290 pips. 290 pips. Interesting, isn't it? So the daily candle right now is bullish. So the bias on the daily candle could be bullish. Now, look at this. Look at the 4-hour time frame. The most recent 4-hour time frame on pound yen is bullish. So for the price to push up, all I need to see is I need to see price. So let's see. From the break of this resistance till here in about 48 pips of range. So from here, yep, 133.460, and the target's going to be somewhere around here. Yep. And let's go to the 2-hour time frame. All right, so this 4-hour time frame. Well, just give me a second. All right, so this 4-hour time frame is going to close in the next 3 hours. So it's kind of interesting to see if this 4-hour candle is actually going to maintain a price above 133.460 or what's going to happen, right? So just give me a second. One more time. Just give me a second. Yep, we got it. Alrighty, so watch this. So I have to wait for the price to close above 133.460. So obviously price is pushing up, making supports, which is a good sign. But on the other hand, we can clearly see that, you know what, price is rangy around this area, from here to here, rangy. So I don't want to mess around the ranges. I always want to target clear traffic or clear candles, because that way my bias can play out easily without any trouble. So if the price starts breaking 133.460, my bias of buy could play out. Now let's see what's happening on the hourly time frame. Alrighty. So hourly time frame looks good. On an hourly time frame, if I have to adjust this area, so what I can do is I can actually make this 133.460 into 133.510. Yeah, that's going to be the area right there. Now look at this. So from 133.510 all the way up to 133.950, it's in about 43 pips range, which is a good number of pips, right, for a trade to happen. I mean, that's a beautiful range. Now, an early buys could have been possible around the break of this high, but I mean, it's way early, right? So I usually come in the market, 2 hours before the New York market open. So this is my usual time, right? Obviously my usual time. So let's go to the 30-minute time frame and see if there's any support forming. Any support. Ooh. No support. Price has been bullishing up pretty hard. Okay. I think we're gonna see a possible fake out scenario too. Now this is gonna be interesting. If there's gonna be a fake out, we can learn about fake out too at the same time. So let's see. Okay. Wait, what's wrong with my mouse? Something's wrong with my mouse. Alright, so watch this. So what we're gonna do here is we are actually gonna follow the candles a little bit, and we're gonna see if any of the 15-minute candle finally closes above 510. Sorry. At this point in time, candles breaking the high, making high highs and high lows. High highs and high lows, which is pretty interesting. Just give me a second around here. Oh my god, something's wrong with my mouse. Or am I being hacked? I don't want to be hacked on a Sunday evening. Okay. 15 pips, okay. So this has turned out to be a rejection area, this one too. So it looks like 133,375 is a rejection area right here. 133,375 is a rejection area. So for the price to push up, I mean, it has to break that level. Now again, at the same time, what we can see is, oh, my mouse is not working, man. I have to fix my mouse, honestly. All right. So look at the way it's so similar to the last trade we talked about. So look at the way how this 133 has been acting out. Prices are reacting around the area. Look at this. Several times. Look at this. Several times. Look at this. Several times. Reacting with the area. Several times. Several times. Now for the price to push up, it kind of has to break and close above. If it starts rejecting that level, prices can actually push down, right? You can actually push down. So let's see how this 15-minute candle is going to close. Let's see. Let's see. The bias is still buy. The bias hasn't changed yet. Oh, now look at this. This was a 115-minute candle closing above 133.376. The bias is so strong, right? Because it's just moving up, making high highs, high lows, high lows. Now for the candles to push up, I mean, it has made a significant high at this point in time, or has breaking a difficult price level. Now for the price to continue up in a clear range, it clearly has to break above 133.510. If I was trading New York session around this sort of situation, I wouldn't take a trade around here, because where would I put my stop loss, right? Because I need a proper spot to put a stop loss at. I need to see a proper support so that I can put my stop loss around that area. I mean, here, taking a entry without a support, I mean, I don't know. Clearly, I don't know. I'm not going to trade without a support. I need to see a clear support, right? So easy and simple. So the next 15-minute candle, ooh, look at this. It's quite interesting how it's printing now. This 15-minute candles managed to close above, and the next 15-minute candle all of a sudden started pushing down and closed below. Now let's see. We are in about an hour and 30 minutes away from the New York market open, and let's see if there's any major news event happening. Any major news event? All right, so unemployment claims around 30 minutes after the New York Bank open. 30 minutes after the New York Bank open, we have unemployment claims, and they're expecting good numbers. So the less people claim unemployment, I mean, it's better for the economy, right? Simple as that. So if the less people, so they're expecting good numbers. That means US dollars actually gaining strength around this time, if that's the case. So 30 minutes after the New York Bank opens, so what we know is around New York session, especially when there's a high impact news in the US dollars, we've seen fellow currency members of fellow currencies showing ranging sort of a price action. So if it's going to range, we will see what's going to happen. So Adnan on YouTube says probably sell limit below the fake out. I mean, I don't know. Right now, I'm not going to trade. I'm not going to take a trade right now because it doesn't make sense. So what I'm going to do is I'm going to forward one more 15-minute candle. Oh, look at this. Now, the 15-minute candles made a support around this area, which is good. But I'm only trying to take buys above 133.510 area. So I'm all good because I'll be waiting for that level. Nice and easy, simple, right? Now, look at this. 15-minute candles are making that support, which is good. I mean, for some of the traders, this sort of support is enough for some sort of traders. They say that, you know what, this is enough for me. I can base my bias off of this. But for me, it's not enough, especially when this is the beginning of the new hourly candle. Now, this right here is the beginning of the new hourly candle. How do I know this is the beginning of the new hourly candle? Look at this. Look at the clock. When looking at the clock, we are 1 hour away from the market open. So 1 hour candle finally managed to close above this area, which is a good sign. But I have to see candles closing above 133.510. That's what I need to see. That's what I need to see. But in the other hand, it actually kind of looks nice, right? Again, at the same time, we have unemployment claims. So what I've seen over time I've seen price ranging. So do I really want to be a part of that ranging market? I mean, if the price has to move up looking at the 30-minute time frame, the next candle also has to make a proper wick like this and start pushing up if that is the case. If that is the case, let's see. Ooh, look at this. Look at the next candle. Look at the next 15-minute candle. That's why I didn't want it to take a buy. This was the first 15-minute candle out of the hourly candle. Now, for beginner traders out there in the YouTube, whatever platform that is, I mean, if you guys know when to take a trade and when to be aware of the market maneuver, that's where you are one step ahead. It's like you know what your opponent, you know what your opponent's cards are, or you know what your opponent cards could possibly be. So for now, I mean, the market played its beginning of the hourly candle sort of a card to us. So we know what to do. Maybe we fold. Maybe we don't take a trade right now. We just get out of the market, and we come in the market once we have a good hand, right? So now let's just see what's going to happen in the next few minutes. Obviously, if the price starts rejecting 133.370 sort of level, then we can obviously push down. I mean, the scalping sort of a selling opportunity also looks nice. So let's see. Actually, I'm just going to do this. Yep. This right there. So let's see what's going to happen in the next 15 minutes here. We are in about 45 minutes away from the market open. Now look at this. Now, as I said, there's a major impact news and the market is rangy right now. Maybe waiting for that volume to come in. Now look at this. Look at the way this 15-minute candle is printing, right? It has actually rejected that top range or top price. Now look at this. This is what I'm talking about. If this was a range where the price stuck, and this was the this was the price level where the price had a hard time breaking through. I mean, it's ranging around that area and it's rejecting closing bearish. So what does that tell me? That tells me that, you know what, there's a resistance being formed here. Price is rejecting the previously respected level, and it's actually rejecting that range with its wick. And if the candles are to push down on the break of the low, it's a very good chance to push down. And the range from that break of that low on the downside is in about 15 pips range. So, I mean, that is still a good scalping sort of a selling opportunity. So let's see what's going to happen. Just give me a second. And let's, so again, at the same time, you cannot always base yourself just looking at one time frame. So you should always navigate around what's happening in the higher time frame sort of perspective. So daily candle, I mean, daily candle is still looking bullish. Weekly candle looking bullish. Weekly candles do have chances to flip bearish. Why? Because, I mean, we are halfway through the week, halfway through the week, and this is the Thursday out of the week, right? And Thursday is sort of like the midpoint for the week. And we have seen markets flipping around Thursdays and Fridays. So it's going to be interesting. It's actually going to be interesting if the candles are rejecting that rejection level, and it's starting to push down. And this 4-hour candle is also closing in the next hour and 30 minutes. It's actually solid, interesting. Hourly candle has broken the previous hourly candle's low at this point in time here, which is a good sign for the candles to push down. Let's see. Ooh, it's starting to push down here. Beautiful. All right, so here's another thing, right? So for example, if this 15-minute candle finally manages to break the low, I mean, our selling bias could make sense. Our selling bias could make sense. Now, on the other hand, if you look into the 30-minute time frame, this is a fake out sort of scenario. Now, how do we know this is a fake out? Look at this. How do we exactly know if this is a fake out? I'm going to show you how. If you look into the 30-minute time frame, it's so clear to see this is a fake out. How is this a fake out? This level right here was a hard level to break. This was a resistance or the top of the range. Now look at the way how the prices reacted around this area previously. Closed above and corrected everything, right? Now similar thing is happening here. This was the first 30-minute candle that closed above, and the next 30-minute candle has corrected every single thing. So the next 30-minute candle corrected whatever happened in that last 30 minutes. So if this 30-minute candle finally manages to close bearish, this is a fake out for me. So all I have to be careful about is a support to form. If a support forms, my fake out idea could be invalid. But on the other hand, the sales are looking juicy. Honestly, sales are looking juicy. So if I was profitable that day already, I would be taking sales already. All right, so listen to this one more time. If I was profitable, I would be taking this trade, risking some of my profits so that I can compound. Because I know this is a fake out, potential fake out. But on the other hand, I will still wait for this 30-minute candle to close. So let's see what's going to happen. Ooh. Okay. Interesting. Ooh. It's ranging. Pound yen is rangy. Ooh. That's why I waited for the 30-minute candle to close. Look at this. Even if the fake out was so spottable, I waited for the candle to close, 30-minute candle to close. And that's why you gotta wait for the candles to close. Now look at this. Oh, did you see that? So the previous 30-minute candle actually closed bearish with a long wick on the bottom. I mean, it was looking like a fake out before, but the candle wasn't closed yet. So what I know is for a fact, now beginner traders can note this down, is around high impact news time. Fellow currencies also have a tendency to sort of range and wait for the volume. So that's what the market was waiting for right here. So pound yen also, because this is New York session and high. So the volume is highly contributed from the New York side of the market, right? And the New York is waiting for that high impact news. So that's what's happening. It's just rangy. Now for the price to push up, I have to see candles breaking 133.510. For the candles to push down, I have to see candles closing below this support area. Simple as that. Let's just forward the candles one more time. Forward. Oh, look at this. Candles breaking above, which is a good sign. Sorry about that. Sorry about that. But for me to take a buy, I have to see candles closing above 133.510. Let's see. And this is, ooh, look at this. That's why I waited for 133.510. I mean, it's rangy. It's rangy, right? So it's so clear it's rangy. Now, for the price to push down, I have to see candles closing below this support. If the candle starts closing below this support, I can take sales. Otherwise, I am waiting because in the next 30 minutes, we have this unemployment claim. And I've seen markets taking shock effects from these sort of news. So we'll see. And next 15 minutes, ooh, look at this candle starting to head below the support area. And this is the exact news event time. So if I was to fall, if I was to backward the candles a little bit, now I'm gonna play the candles. Let's see. Playing the candles. This is the high impact news time unemployment claims. So let's see what kind of shock effect does it have, right? Ooh. And that push down was a shock effect from the unemployment claims. So it looks like there's going to be volume in the market once the volatility dies. So maybe if there's some sort of volume in the market, on the break of the support, on the break of the resistance, there could be some sort of trade because the market's been rangy, right? So let's see what's going to happen in the next 15 minutes. Ooh. And we are 1 hour away from the New York Open and 30 minutes away from the news event. Let's see how the numbers were. And the numbers turned out to be bad. I mean, technically good than before, but they were expecting good numbers, so the numbers were bad. So U.S. economy, pretty bad, right? So let's see what's going to happen. I mean, it's fellow currency, pound, it's ally. So let's see how it's going to act out here. Oh, look at this. So this 15-minute candle actually managed to close below the support, right? Now, at this point in time, my bias is more sell than anything else. I mean, I'm not going to take a sell right here because this is too late to take a sell. On the break of this support around here with the pending, maybe that could have been an idea, but with a large stop loss, maybe no. But again, let's see what's going to happen in the next 15 minutes, because in the next 15 minutes, we're going to experience NYSE. So let's see what's going to happen here. Ooh, the market, the candles just retraced back. So this is an interesting market read. So why is this an interesting market read? Because look at this. I'm going to show you guys why this is an interesting market read. Look at this. Candles made a support. This was the first candle that successfully closed below the support. The next candle corrected whatever happened in that 15-minute. Corrected everything that happened on the downside. So this is a possible breakout, a possible false breakout on the downside. So this is a possible false breakout on the downside. This is what I need to see. This is one of the scenarios I need to see in the candles to take a trade. So the candles have to make a low, reject the bottom price, and start heading up. And this is going to be my trade right here. So the range from the current price is in about 10 pips. Maybe no. Maybe the fake out idea could be right. But I mean, I am not going to take a trade in a 10 pips range. Now, this is another important idea the beginner traders in the YouTube have to understand, that when trading, you always have to try and trade in a larger range so that your chances of profitability is higher. If you trade in a smaller range, I mean, it's hard to secure all of that range. And it's not only hard to secure that range, but the market could be really tricky to trade in that range. So you want to trade in a clear range, maybe above 133.510 or below 133.045. That's what you want to do. All right, so Adnan says weak USD means JPY strong fundamentally. So if news is bad for USD, JPY is sell, right? I mean, depends. 100% depends on the fundamental status at that time. Because obviously we're just looking at some of the random ass numbers here. Looking at the news data from before, we don't know what was the past fundamental status at that time, right? We didn't know what was the relation between the USD and yen. We didn't know if investors were confident in yen bonds and yen currency index itself. So we don't know exactly if GJ is a sell or not. But technically, what I've seen over time is when USD has a really bad number and the gold starts moving up at the time of fundamental news, I've seen GJ falling down. And now for GJ to push down, as I said, I have to see candles pushing below 133.045. That way only I can take a trade in a clear range. Otherwise, it's a no trade day for me right here. So let's see what's going to happen anyways. Oh, it's starting to push down. The market is really funny at this point in time. If GJ is sell, we will see. Because this is 15 minutes after the NYSE at this point in time. 15 minutes after the NYSE current 4-hour candle is actually looking good. The 4-hour candle is going to close in the next 3 hours, and usually 15 minutes after the 15 to 30 minutes after the NYSE, I leave and I call it a day because I don't want to stick to the chart forever, right? That's the idea. I just want to call it a day. So let's see what's going to happen here. 30-minute in the 30-minute in the other hand right now, this current 30-minute candle is looking pretty solid. To be honest, this 30-minute candle is looking pretty solid. Wow. Pretty solid, to be honest. And let's see what's going to happen in the next few minutes. I think this support, I think 133.045 is going to be hit. Let's see what's going to happen. Oh, no, it's a no trade day for me. This is the type of day where I need to stay away from. this is the type of day I need to stay away from actively. Because look at the way the candles are printing, man. This is the most haphazard way of printing ever. Too volatile, too volatile. So I have to be clever. I have to be clever to call it a day in these sort of days here. Ooh, and it's starting to push up now. Ooh, it's starting to push up. Look at that. So finally, around this time, I would be calling it a day, but my bias of buy above 133.510 was correct. So if I was to wait for the markets, if I was attending the market, I would take a buy above 133.510. But this is not my usual time of trading, obviously. So above 133.510 was the trade. 30 pips move. Beautiful. This was the original trade I was waiting for. Look at the way the candles moved up. Look at the way the candles are moving up. Look at the wicks. Look at this wick, so beautiful. Look at the next candle. And look at the next candle. Look at the next candle. The next candle rejected the bottom price with this wick and started pushing up. This is lovely. The way it's moving, it's lovely. But again, at the same time, I mean, I wouldn't be in the market. Ooh, oh man, look at this. So much volume here. God damn. Look at the volume above 133.510. The candles are pushing like almost about 160 pips. Beautiful. Beautiful push on GJ. Beautiful push. All right, guys. So that was actually a lovely time here. We did talk about some important ideas. I mean, I think that's just going to be it today. That's just going to be it. So we are happy to answer some of the questions from the YouTube. So if you have any sort of question, we are happy to answer. We will come and do another simulation session, another Sunday again, one more time. Now here are some of the important topics I have to talk to you guys about. Now, with the ideas of risk management, where do you put your stop loss? Right now, one of the best ideas to put your stop loss is below the previous candle's low, because that way we are anticipating candles to respect the previous candle's low and start pushing above, right? So respecting the trend. I mean, if I was to take a trade above 133.510, for example, look at this. If I was to take a trade above 133.510, my only idea right now should be to wait for the next candle to kind of make its wick before moving in my direction. That's all for patience. Just wait. That's correct. Muhammad says that's correct. So he says that's all for patience. Just wait. That's correct. Let's see. So for the next candle to push up, what I need to see is I need to see the candles making a low wick in its first few minutes or first half before moving up. That is a simple price action rule or movement we've seen over time. So that's something I need to see right now. At this point in time, I'm going to play the candle. Look at this. The candle's moving down in its first few minutes, trying to make that low. That is lovely. Now, this is the point of time. If I was in the market, I would decide that, you know what? On the flip of this candle, on the break of this candle's own high, that's going to be my position right there. And I'm going to put my stop loss below the previous candle in about 15 pips, which is nothing, which is actually nothing. So on the break of the current candle's high, I'm going to place my stop loss below the previous candle's low, anticipating the candles to move up with volume and also respecting the trend. The trend is bullish because the candles are pushing up with heavy volume. Right? So this is what I'm going to do. I'm going to wait for the candles to flip. Now, that is the part of patience you need. And the candles are still, ooh, and it's starting to flip bullish, which is good. Let's see. Oh, and missed that trade. So one of the best way to catch that trade could have been a pending order. Could have been a pending order. But that was the idea. See how the candles were actually making its low in its first half before moving up. So that is the idea, right? Obviously, the candle moved too fast because the simulation is fast forwarded and it's moving up with speed. But this will be the idea. The stop loss will be below the previous candle and the pending will be somewhere around here, waiting for the candles to break its own high and anticipating the price to move up in the clear range. The clear range was anticipated and then found out right at the beginning. Right, so this would be the trade right here. This will be the trade idea right here. And look at this, the candles are breaking the high. And again, the thing is, you only place the pending after the candle is made a low, right? You don't place the pending before the candle makes a low, right? I mean, you can tap that price and start heading down. So you wait for the candles to make its low before putting the pending. So in about 7 pips in profit. And usually what I do is I secure once I'm in that 10 to 12 pips of profit. So the candle is running pretty well. Now I'm going to show you another trick that professional traders do. They manage their trade accordingly. So this is going to be the position where I usually secure half. So secure half right here. And my mouse is not working. Man, please don't do that to me. And so what I'm going to do is I'm going to trail my stop loss, right? Just give me a second. All right, so. And this is going to be the position where I'm going to trail down my stop loss. Oh my God, my mouse. God, help me, God. Oh my dear Lord. So I'm going to trail down my stop loss to in about 6 pips. So 6 pips, I mean, pretty good because I'm anticipating the price to move up with volume and respecting its low, respecting the trend. So if the candles are to push down, it has to kind of respect that trend, right? So let's see what's going to happen here. My mouse. Oh my God. Honestly, too bad. Anyways. The candles are pushing up. I mean, and I'll close the whole position once I've hit that 20 pips, right? Usually 20 pips. Now it's moving up and I close my position. Bang. And I know it's going to move up, but still, that is my trading plan right there. And it's pushing up. Ooh, 100 and something pips. I mean, lovely. Lovely trade. So, all right. Thank you guys for coming in. I mean, beautiful. If there was any question, we were happy to answer, but didn't see a lot of questions from the YouTube guys. So if you guys really enjoyed this simulation session, please do like and subscribe to the channel, and please do forward the channel to your friends so that we can build a community in the YouTube. And obviously we need that love and support. So thank you for coming in, having a lovely time, and take it easy. Never overtrade and never feel FOMO. You don't need to feel formal. The market's going to come to you, and that's when you attack the market. Until then, take it easy. Have a lovely time. And that's all I want to say. So have a lovely time, guys. I'm going to see you guys next time. See you guys next time.